The cleanest energy on Earth begins with a single mine in the Democratic Republic of Congo. It's a hole in red dirt, a kilometer deep, where men chip away at rock that contains a soft silvery metal called cobalt. This mine, and a handful like it, are the starting point for every lithium-ion battery on the planet. The paradox is absolute. The future of green energy, of electric vehicles and grid-scale storage, is physically anchored in one of the most unstable, conflict-ridden places in the world. The system that promises to free us from fossil fuel geopolitics has created a new, more concentrated map of dependency. This is the Energy Historian, uncovering the hidden systems that power civilization. The story isn't about solar panels or wind turbines. It's about the dirt we must dig up to build them. We are told the energy transition is a shift from flows to stocks, from pumping oil and gas that constantly replenish to mining minerals that are finite and fixed in the ground. But that's the comforting version. The real version is a scramble for geological lottery tickets, where the winning numbers were drawn billions of years ago by ancient volcanoes and seabeds. Over 70% of the world's cobalt comes from the DRC. Over 80% of rare earth processing is controlled by China. Over 60% of the world's lithium is mined in Australia, Chile, and Argentina. The map of the clean energy future is not a map of technology adoption. It's a map of ore deposits. And that map is far more monopolized than the map of oil ever was. Think about the scale of the digging. A single electric vehicle battery pack requires about 8 kilograms of lithium, 35 kilograms of nickel, 20 kilograms of manganese, and 14 kilograms of cobalt. Multiply that by the hundreds of millions of vehicles and the grid storage to support them. The International Energy Agency estimates demand for critical minerals will quadruple by 2040 to meet climate targets. But here's the catch. A new oil well can be drilled and producing in months. A new mine takes a decade or more to permit and build. The transition now moves at the speed of geology, not policy. This creates a brutal structural truth. The countries and companies that control these mineral supply chains don't just sell a commodity. They sell permission for the energy transition itself. They control the timeline. They set the price floor for everything built on top of it. A lithium shortage doesn't mean a few less EVs. It means every battery, for every purpose, becomes more expensive overnight. The bottleneck isn't manufacturing capacity or consumer demand, it's extraction. So we return to the Congo. For decades, cobalt was a byproduct of copper mining, an afterthought. Then, the lithium-ion battery was commercialized. Suddenly, this obscure metal became a strategic pillar. The DRC has the world's largest reserves, but the mining sector is a patchwork of industrial giants like Glencore and Chinese-owned conglomerates, surrounded by a vast informal sea of artisanal miners, over 200,000 people, digging by hand in perilous conditions. This is where the clean supply chain meets the dirty reality. The cobalt from these small-scale mines, often mined by children, bleeds into the global market. It's virtually impossible to trace. Your electric vehicle's battery is almost statistically guaranteed to contain cobalt touched by this system. Then, the conflict isn't just about labor conditions. It's about control. In 2016, the Congolese government sold off a massive stake in its state-owned mining company, Gécamines, to a mysterious Chinese-backed consortium for a fraction of its value. It was one of the largest resource asset transfers of the 21st century, and it happened with almost no international scrutiny. Why? Because the world was focused on oil in the Middle East. The new resource chessboard was being drawn in Central Africa, and one player was quietly taking the board. This pattern isn't new. It's the oldest playbook in energy history, just with new minerals. Look at Chile in the early 20th century. Nitrate deposits, essential for fertilizer and explosives, made the country wealthy. British and German capital flowed in, controlling the Oficinas Salitreras, the mining towns in the Atacama Desert. The wealth was immense, but it was extracted literally and financially. Chile's economy became a monoculture, utterly dependent on the global price of nitrate. When synthetic alternatives were invented in Germany, The Chilean nitrate empire collapsed overnight in the 1920s, triggering economic and political chaos. The country that owned the resource was the last to benefit and the first to suffer. The same structural logic is operating now, but at a higher velocity. Rare earth elements with names like neodymium and dysprosium are essential for the permanent magnets in wind turbines and EV motors. In the 1990s, China made a strategic decision to dominate this sector. It wasn't just about mining. It was about mastering the entire chain, the toxic, complex processing that turns ore into usable metal. Western producers, unable to compete with lower costs and laxer environmental standards, shut down. By 2010, China controlled over 95% of global rare earth production. That year, it demonstrated its leverage during a territorial dispute with Japan, abruptly slashing rare earth exports. Prices spiked 600% in weeks. The message was received: green technology depends on a Chinese industrial policy decision. One material now decides how fast everything changes. This is the mechanism line of the new energy era. The transition is a supply chain before it is a technology. You can have the best battery design in the world, but if you cannot secure the cobalt, the lithium, the nickel, at scale and at cost, it is a laboratory curiosity. The real innovation isn't happening in Silicon Valley R&D labs. It's happening in mineral processing plants in Inner Mongolia and in the boardrooms of mining giants, calculating decade-long payback periods. This leads to the asymmetry. Who pays for this system? Look at the cost structure of an electric vehicle. The battery is roughly 40% of the total cost. Of that, the raw materials are the largest single component. When mineral prices spike, automakers either absorb the margin hit or pass it to consumers. But the mining companies, especially those with secure, low-cost reserves, see their profits soar. The financial risk of the transition is socialized spread across consumers and taxpayers through subsidies and higher prices, while the geological reward is privatized to those who own the best rocks. The clean energy economy, in its current form, is not a departure from resource geopolitics. It is its intensification. Fossil fuels are ubiquitous. Oil is found in over 80 countries. Critical minerals are hyper-concentrated. This creates a perverse incentive. The greener the ambition, the more leverage is handed to the regimes that control these mines. The European Union's Green Deal, America's Inflation Reduction Act, these are multi-trillion-dollar policy frameworks that are, in practice, dependent on supply chains that run through jurisdictions with opaque governance and strategic rivalries. We've seen this movie before. It's the story of oil in the 1970s. The West built an industrial civilization on a resource it did not control, assuming the producing nations would always need its cash. Then came the embargo. The shock wasn't just the price of gasoline. It was the realization that a core input to everything food production, transportation, manufacturing, could be weaponized. Today, we are building a post-oil civilization on a foundation of minerals that are even more concentrated. We are replacing a diffuse dependency with a pinpoint one. Oh, so what breaks first? It's not a war over a mine, it's a price shock. Imagine a political disruption in a lithium-producing region, or a new export tax in a cobalt country. The signal would flash through futures markets instantly. Battery manufacturers would face impossible choices: pay the inflated price and kill their margins, or slow production and delay the rollout of millions of vehicles. Grid storage projects, crucial for balancing intermittent renewables, would become unaffordable. The entire timeline of decarbonization would stretch out, not because of a lack of will, but because of a shortage of dirt. This is the counterintuitive answer promised by the title. The cleanest energy starts the dirtiest conflicts, not because green tech is hypocritical, but because its material foundation is rooted in the same zero-sum geography that has fueled resource wars for centuries. We attempted to escape the vulnerabilities of a fuel-based system by building a material-based one, but we merely traded one set of choke points for another, more acute set. The conflict is quieter fought in corporate takeovers, export licenses, and mining concessions, but the stakes are the same. Control over the physical stuff, that makes civilization run. The human anchor here is not a miner. It's an engineer in Stuttgart or California, staring at a spreadsheet where the cost line for battery cells has just turned red because of a coup 8,000 miles away. Their entire product roadmap, their company's valuation, their national climate targets have just been recalibrated by an event they cannot influence. The system's fragility is transmitted instantly, financially, before a single shipment is ever delayed. The real question is whether this is a temporary phase or a permanent condition. Can technology innovate its way out of this material trap? Sodium-ion batteries that avoid lithium and cobalt are in development. Recycling loops could eventually create a circular supply, but these are decades away from mass deployment. The next 20 years are already locked in. They will be mined, processed, and shipped according to the map that exists today. The transition's first phase is a race down predetermined geological tracks. We framed the energy transition as a victory of silicon over carbon, but silicon is just the conductor. The heavy lifting is done by metals ripped from the earth. The system's stability no longer depends on steady flows from wells, but on continuous, massive tonnage from a few dozen megamines. And those mines exist in the real world with its politics, its corruption, its inequality, and its history. We didn't leave the old world behind. We just gave it new leverage. If you think the future runs on code and sunlight, drop your answer below. I'll break down why the hardware, the literal Earth still, calls the shots in the next episode. If this changed how you see the system, subscribe. The hidden infrastructure is always there. Now you know where to look.